Welcome back to the deep dive. Anyone watching the markets or, frankly, just scrolling online this week knows the crypto world never stands still.
Definitely not. Always something happens.
It's fast, furious, always eventful.
Yeah.
So today, our mission, as always, is to take this pile of recent stuff, articles, research, our insights, and kind of boil it down.
Yeah, get to the core nuggets. Give you that shortcut to really understanding what went down.
And for this deep dive, we're jumping right into the latest week in crypto. The sources we look at, they paint it as this kaleidoscope of power moves, legal drama, and bold regulatory shifts.
Right.
But underneath all that noise, there's this clear theme emerging. Crypto isn't just, surviving anymore. It feels like it's properly evolving. We're going to unpack the volatility, sure, the big speculation, but also, crucially, those deeper trends that are really shifting the ground.
Exactly. And it's not just about watching prices bounce around on a chart, is it? Our analysis, well, it showed this past week, was a perfect example of how regulation, these big institutional moves, and, yeah, even just pure raw mania.
The mania.
It all feeds into this living, breathing ecosystem. So by connecting the dots from all these different sources, you should hopefully get a much clearer picture of what actually matters right now.
Okay, let's kick off with the big picture then. The overall crypto market cap. It blew past $4 trillion this week.
Huge number.
Huge. And our research, it described this as no ordinary pump. It's a flex. And interestingly, driven mostly by altcoin momentum.
That's a really important point, actually. Hitting $4 trillion isn't just about the money flowing, and it signals, well, a broader interest, doesn't it? More investors feeling confident beyond just Bitcoin and Ethereum.
Right.
This flex from the altcoins, as the source put it, it really shows a shift. You're seeing capital flow much more aggressively into that wider altcoin space, maybe hints at a new market phase, or maybe just, exuberance.
We'll see which one. Let's zoom in a bit then on specific coins, because that's where things got really interesting. Ethereum, for example. It just smashed through $4 today.
Yeah, what was it, about a 26% rally?
Wow.
Pretty significant.
Absolutely. And our analysis pointed to it being fueled by leveraged liquidations.
Right, the shorts getting squeezed.
Exactly. That cascade effect. Plus, good old retail FOMO. People jumping in, afraid to miss out.
Always a factor.
Meanwhile, Bitcoin, it printed a new 10-day high above 118K. But it felt different, didn't it? Well, the alts were having this wild party.
Yeah.
Bitcoin was on this, steady, unflashy climb. Sort of felt like it was playing the long game.
Which connects perfectly to that proper take insight we found, right? Rallies are real, but so are the risks.
Good reminder.
Yeah. ETH surge, the market cap jump, it's all impressive stuff, no doubt. But the sources also warned, busts can follow as fast as the gas fees.
True enough.
It just pushes for that balanced view, Enjoy the ride, but remember how volatile this space is. What goes up fast
can come down just as fast. Okay, so shifting gears from the sheer market frenzy, let's look at the sort of institutional and legal side. This felt huge. Crypto sitting pretty in trad 401ks.
Yeah, that was a big one.
We saw Trump's executive order, which effectively cracks open the $12 trillion retirement pot to crypto.
Wow, $12 trillion.
I know, and the way our research framed it was big risk, big reward, or big scandal. Covers all bases, I guess.
Well, yeah, but think about the implications for adoption. This kind of mainstream integration, it could fundamentally change how people see crypto, its stability, its liquidity. Maybe it's a huge signal anyway. The old guard, traditional finance, they're having to reckon with digital assets now, even embrace them. But like our source said, it's revolutionary, but regulators watch your backs.
Always that tension.
Absolutely. We still need the frameworks to catch up.
Speaking of frameworks and legal stuff, Ripple. That court showdown finally wrapped up, ended with a, $125 million fine?
Yep. Steep, but maybe not as bad as it could have been for them.
Right. So XRP, it lives to fight another day, as they say. But that legal bruise is real. It's been a long fight.
And connecting that to the bigger picture. Outcomes like this, even settlements, they just highlight that challenge. Legal clarity, not quite.
Still murky.
Very. These upheavals, like Ripple's case, they just show the deep complications ahead for the whole regulatory scene. It's like a patchwork quilt being sewn one awkward stitch at a time.
That's a good way to put it. And another stitch, maybe, was the Storm's verdict on the Tornado Cash developer. Guilty on one count, but with a suspended sentence.
Right, which really throws that whole privacy versus prosecution debate into sharp relief.
And what the source called the slippery slope of developer liability.
Exactly. It raises fundamental questions for the whole decentralized world, doesn't it? How do you balance innovation, which often thrives on privacy and, well, pushing boundaries, with accountability, especially in systems designed to be decentralized? These cases, even with suspended sentences, they set precedents. They shape what developers might do next, what risks they'll take. It brings individual responsibility right into the heart of this complex digital space.
Yeah, fascinating stuff. Okay, let's pivot now. Away from the courts and regulators towards the wilder side, the undercurrents. We saw whales fan out, meme coin bonanza.
Ah, the meme coins, never dull.
Ever. Our deep dive flag specific ones.
Yeah.
Lopep, Pengyu, SPX, Doji, Shib,
Right.
Emonk. Quite the list. But the key observation was large holders are buying the dip. Strategic moves, maybe?
Well, as one source quipped, whales never sleep.
Seems true.
And it is true, these big bets from the large holders, the whales, they are often what drives those crazy surges or sudden plunges in meme coin.
Like they move the market.
Massively. It's why the research suggested, maybe slightly jokingly, the rest of us might want front row seats, because watching them, you really see the immediate market dynamics play out. High-stakes poker.
Interesting. But on a perhaps more stable note, we're also still seeing serious corporate HR dealing.
Right, that's the other side of the institutional coin.
Yeah, our findings showed 20 of the top 100 public companies increased BTC holdings. That feels different from the 401k thing, more like a long-term treasury play.
It's a great contrast to the meme coin frenzy, isn't it?
Totally.
It just highlights how diverse the players are becoming. You've got individual whales betting big on, PNG or whatever.
Right.
And then you have these established public companies methodically adding Bitcoin to their balance sheets. It shows the ecosystem is maturing, even if it's still got these wild, volatile edges.
And speaking of new frontiers, especially in DeFi, our research flagged a new DeFi revenue beast.
Yeah.
EdgeX protocol.
Ah, yes, EdgeX, impressive numbers.
Right. It apparently raked in $2.08 in 7 days. And get this, it was even surpassing giants like Ethereum and Solana in 7-day take.
That's pretty remarkable for a new protocol.
And then there was MYX Finance. Just skyrocketed 9,000% over the week. Basically went from nowhere to everywhere overnight.
Wow. That really shows DeFi's next level hustle, as the source put it.
Yeah.
But it also brings up that crucial question they posed, LFG or danger zone.
Huh. LFG. Let's
Oh.
go.
Let's go and go. But you get the point. Is this sustainable growth real innovation, or is it just a bubble waiting to pop?
The eternal question in crypto.
Exactly. It reinforces that while these new protocols rake in DeFi dollars, you really need to understand the undercurrents, Try to figure out what's lasting and what's just a flash in the pan. It all matters for understanding the bigger market picture.
So wrapping this all up, what does it mean for you listening in? This past week, it was like a snapshot of everything crypto is right now.
A whirlwind.
Yeah. Explosive growth, driven by new forces, these mixed signals from regulators still playing catch up. And this fascinating, sometimes totally chaotic clash between serious institutional adoption and, well, meme coin speculation.
It really is that living, breathing ecosystem we talked about, shaped by regulation, big money moves, and just pure human emotion, mania, fear, greed.
Yeah.
In crypto, every week feels like a carnival. This past week, it was maybe a full-blown zoo.
Sounds about right.
You've got the greed, the fear, the regulation trying to step in, the nonstop innovation, and honestly, it feels like it's only getting wilder.
So the thing to think about is, how do these powerful forces keep colliding? How are they going to reshape finance? Because what's clear from everything we looked at is that the next big headline, the next market shock, it's always just around the corner.
And it's going to be inevitably, unapologetically explosive.
A powerful way to put it. It sounds like the takeaway isn't if crypto's changing, but more about how we all navigate this increasingly complex, often wild ride.
Precisely.
Well, until next time, strap in. Because the journey through the deep dive definitely continues.